so that you can take notes for today's session. We are going to get going. Just as general housekeeping, you can put your questions in the comment or in the chat box, as I do keep it open so that I can see any of your questions while we are doing this here. And at the end, as long as we have time, we will go ahead and answer some of your questions live. So give me 2 seconds. We are going to go ahead and all right, so if you guys can let me know in the chat box if you can hear me, and then we'll go ahead and get started. Awesome. All right, so today me and Kevin are going to be sharing with you guys secrets to credit and home buying success. We have collectively been in the industry for a while. So today's focus is going to be teaching you the different steps that you need to prepare yourself for home ownership. Kevin is with American Eagle Mortgage based out of Georgia, and he is what I call an expert in helping people qualify for home mortgages with student loans. And I'm employed by eXp Realty, or I work at eXp Realty, where I'm able to help you with your home buying and selling goals. Aside from that, I do specialize in helping credit challenge individuals become mortgage ready so that they can reach their home ownership goals. So let's go ahead and get going. So for those who don't know me, my name is Shannon, and I've had my fair share of lemons, as I call it, kind of like a lemony snickets type of thing. So if it could happen, it happened to me, and I've been able to be gifted as a problem solver to work my way through that with guidance and wisdom, so that I can share those steps with you today so that you can achieve your home ownership goals, whether you're having issues with your credit or your personal finances, or whether it's a mindset issue. Okay. As you can see here, again, I'm a licensed realtor in the state of Delaware and certified credit counselor. So it's my goal to help you reach your credit goals by helping you have a better understanding of your finances and helping you overcome any hardship that you could be having. What makes me different? So I'm different because I actually experienced what a lot of people experience on a day-to-day basis. I have had a hardship where I have been homeless. I have also had to be a first-time home buyer. I've experienced job loss and different things, and I've been able to take the steps that I use to overcome those issues to be able to help you. We've helped hundreds of families become homeowners since we've started working in the housing industry in 2008. A little bit about me and some of the awards that I've received. I've been featured in the ARC. The U.S. Department of Labor considers me an industry expert for credit repair. I've been featured on the I'm Still Standing podcast, as well as a top producer at my previous brokerage where I was employed. Now, today we're going to go over some basics to teach you how to prepare for homeownership. Now, I think it's important that you understand what's necessary for you to become a homeowner, not necessarily what you have to deal with as a homeowner. Okay, so we're going to get started with going through low to no money loans, credit score requirements, how much money you need and how to get it, who decides what house you can build or get, what you can expect from me as your agent, as well as Kevin as your lender, and ways that you can save money and build your credit for home ownership. Okay. So where do we start? So the first step that you're going to want to make is you're going to want to get or have an understanding of where your credit is. You want to make sure that that's in good standing. And then from there, you're able to connect with a lender who can answer your questions about what you can expect in the qualifying process, as well as helping you with determining how much home you can afford based off your income and different information that he or she may collect from you. Once that information is completed with a lender, then they can help you with getting a pre-approval, which is the step of actually having spoke to the lender, pulling your credit and getting you a concrete answer about what and when you can purchase. All right. So I know he hasn't said much yet, but we're going to go ahead and let Kevin take over from here. He is going to share with you guys the different documents that you need and how you can pre-qualify for a home as you start. Kevin?
Hey, how are you?
Great. How about yourself?
Doing good. So, in terms of documents required, we definitely need 30 days of your most recent pay stubs. So, example, if you got paid today on August the 4th, 2020, then we need that pay stub. And then we need the previous pay stub if you get paid every 2 weeks, or if you get paid every week, we'll need 4 pay stubs. This gives us a idea of your income consistency. So because of COVID-19, some people are now just getting back to work full time, and the previous pay stub may only have 30 hours, where this one has its traditional 40 or 80. So we just need to see the consistency of the pay and just to make sure you're still working. We also need the most recent 60 days of bank statements, all pages. So right now we understand it's August 4th and July statement may not be out. Well, please get us June and May. And when July comes, just forward it to us so we have the most recent documentation on you. We need all pages, even if the page is blank. 2 years most recent tax returns. If you don't have 2019 tax returns done because you did a extension for some reason, then we need 18 and 17. If you have 19, give us 18 and 19, all pages and schedules. Don't take anything out of it that you don't need to. We only need federal and not the state. We also need the last 2 years of W-2s. Yes, we see your tax returns, but we also need the W-2s to verify the income as well. So we'll need 2018 and 2019 W-2s. As far as your ID, we need a most recent ID, driver's license, social security card as well. And then if you don't have your social or driver's license, then we definitely need your passport. Something to identify that you are who you say you are, and we can match it up with your documentation. If you are using child support, alimony, disability, or social security income, then we need the most recent documents for that. So with the disability and social security income, they only send out a statement once a year at the beginning of the year. We need that statement. We can't take 2019 if that's the income you're going to use. We need 2019 and 2020. So with that being said, if you don't have it, reach out to the disability office as well as the Social Security Administration office, and they will be able to help you obtain a copy of those documents. The alimony will need a copy of the court order, and the same thing with the child support.
So, Kevin, can you touch quickly on what can be expected if you're self-employed and trying to become a homeowner?
Yep. So if you're self-employed, and I think people get it mixed up, so I want to go deep into this one. So if you're self-employed, that's anything outside of receiving a W-2. If you're a truck driver or a contractor and you receive a 1099 from your employer, we need the 1099s. If you are not a contractor and, let's say you're a barber or a hairstylist, we need, along with both of those things, we need your tax returns for the last 2 years. We need most recent bank statements. We also need a year-to-date profit and loss statement. So from January 1st to August the 4th, 2020, we need your profit and loss statement just to make sure you're still on pace to make the same amount of money or more income in your business.
So a lot of times people think, and this is going to be slightly different from what we usually do, but we like to service the people. So sometimes you get people like, oh my gosh, I'm self-employed. There's no way I can qualify for a house. So is there a certain amount that people need to look for? Just submit what you have, and then qualification can come.
So yeah, so that's what happens with qualifications come after we see what you have. So example, if you're a self-employed borrower, the person who prepared your taxes most likely wrote off a lot of your income just so you wouldn't have a huge tax bill to pay at the end of the year. So the benefit of that is you don't pay a lot in taxes, right? The not so good benefit of it is when you go to apply, it looks like you don't make as much money as you do. So based off of what comes in monthly and what goes out monthly will determine how much you qualify for. So if you make $60,000 in your business, but it only on your taxes, it looks like you make 10, 12,000. That means we're only allowed to carry $1,000 a month of income. If you've got a car payment that's $500 or $600, you're not going to qualify for a house. So if you know that you're going to look to try to purchase a home, then you need to carry and show some income on your taxes so we can see what you can really qualify for.
So I don't know if you feel comfortable answering this, so I'm sure you'll let me know. So let's say if a person says, so is it better for me to be considered 1099 or W-2 if I'm self-employed? It's probably easier for W-2s, but you can qualify people off of 1099.
Yeah, but if you're self-employed and you write yourself a W-2, they're still going to need to see the business bank statements because we have to see that the business can sustain staying in business as well as paying you on a W-2.
Mm-hmm.
Yep. So you still kind of qualified the same way because you own the business.
Okay, I see. All right. So I'm sorry, I wanted to ask that because I knew that that was something that was important, for people, particularly because a lot of people are self-employed right now. So you were saying they can use child support, alimony, disability, and SSI as far as qualifying for a home.
Correct.
All right, great. All right. So why do they need a pre-approval?
So they need a pre-approval so that when they meet with their real estate professional, one, they're not wasting their time trying to figure out what price range you're in. And then two, for that same reason. So you're not trying to figure out, well, I want this $300,000 house. I'm gonna put an offer in. And then when you get pre-approved, you're only good for $100,000. So at least it gives you an idea of, how much you can qualify for. The other thing it does is it allows for you to put in a strong offer. If you're going up against someone in a multiple offer situation and you have a pre-approval from a lender and the other person doesn't, most likely you're going to win that approval because the other person, we don't know if they can qualify or not.
Okay, I see. So that it's like saying this is your proof for sure that this is what you can do while you're trying to qualify for a home.
Correct.
As far as the lender side. So from the real estate perspective, or from your realtor perspective, we need it because it lets us know what type of home you can qualify for. So every house that's on the market that you might not be able to work with the financing type that you have. So we like to make sure that you have your pre-approval so that when you find the house that you love, we know that you can go ahead and get it, because we would hate for you to fall in love for a home that we don't have the paperwork proof of you being able to afford. All right. So that's something that we like to do to make sure that you can get what you want. So a lot of times the major question that most people have is, okay, so I know I need to speak to a lender. I know I need to speak to a realtor. I have an idea that my credit can't be trash, but how much do I need to get started in this home buying process? And it's not as bad as you would think. So for most people, I say you need $2,000 no matter what. Would you say that that's a fair starting space, Kevin?
Yep, it is. It is.
Yeah. And the reason being is, one, you're going to have to pay some money out, right? When you go and you speak to a lender, they're going to say, hey, listen, do you have any money saved? And when you can say, yeah, I have at least 2,000 saved, then the lender's like, you know what? Good. You're putting some skin in the game, kind of puts you in a better position. It'll help you with the money that you'll need for your earnest fees, which would be the deposit for your offer, as well as helping you pay for your home inspections, right? So it kind of just helps you in that space. Now, from there, the amount of money that you would need is going to be dependent on the type of loan program that you qualify for. Now, one question that I get a lot, and I'm sure that Kevin, you probably get some variation of this question is, well, how do I know that the lender is going to tell me the best program for me? And are they going to run my credit a lot? And I'm like, no. When you go to speak to the lender, they're going to run your information, once you make the decision to move forward, and they're going to tell you the best program to work for what you're telling them that you want to achieve. So, Kevin, typically that conversation would go something like this, right? Hey, I'm interested in purchasing a home. And then you would say what?
Have you been pre-qualified or have you been through the process before?
No, I haven't.
So then my next step is I've got a series of questions to ask you, and I ask them, are they currently working? And when I say currently working, do you currently have a job? And right now, are you furloughed or are you actively working?
Mm-hmm. Now, for the people who don't know what furlough means is, are you on break from your job? Meaning you're going to go back, or do you not have a job at all and you don't know if you're going to go back? Because that can happen no matter what the circumstances are in life. So if it's a person who's like, nope, I'm employed, then the next thing is to what? Collect credit scores or different information.
Yeah, so then my next question is, have you filed bankruptcy in the last 7 years?
Okay. And this is important because it lets them know, well, it helps you understand what products or what, if they can qualify for a loan yet, correct?
Correct. Yeah, and what product because if they say yes, then there's only one or two products they can use at that point.
Right. So for a lot of people, you'll hear a lot, oh, well, if I had a bankruptcy, then I can't qualify for a house, which isn't true. You can qualify for a home after a bankruptcy. It's just going to be certain programs and it's going to be certain stipulations that they're searching for, right? So,
Right.
if you've had a bankruptcy, that's not a deal breaker. So typically from there, he'll be able to take your information if the answer is no, and then we'll move through to the next phase, which is collecting your information. And let me know if I'm missing anything. Collecting information so that they can run you through the system to determine which program will work best for you and how much you qualify for.
Right.
Okay. Now, based off that response, that's how I have these numbers here. So most people will say, oh, well, I purchased a home with no money down. That's going to be your standard USDA or VA loan, meaning it's government backed and you don't have to put any money down. So no matter how much money you borrow, you don't have to put down additional monies aside from your earnest fees and your closing costs. Okay. And so we're clear, closing costs are basically costs that are associated with closing your loan. So it's going to be, the attorney's fees with like doing a title search and things of that nature. And we'll get to that a little bit later in this presentation. The traditional conventional loan is the loans like our parents or grandparents might have used, unless you're a first generation home buyer. And if you are, then most people who are homeowners previous to 2008 were doing a lot of conventional loans. They had to bring 20,000 or 20% to the table, but that's different now. Now it's more like you can do a minimum of 3,000 for every 100,000. Now, Kevin, can you give a little bit more insight to that, or am I pretty much covering everything there?
No, I think you've covered it pretty well.
Okay.
Good.
Look, I'm getting better. Mm-hmm. And then you have the $3,500 is what would be necessary for every $100,000 that you borrow for FHA. And what FHA says is, look, home buyer, you can come to us and we'll overlook some of your credit flaws. In exchange, you'll have to bring $3,500 for every $100,000 that you want to borrow, right? So if you know that you want to do a $200,000 house and your credit might not be as strong as it could be, then be prepared to bring money to the table. So when you're preparing for your mortgage, the thing is you want to go ahead and pull your FICO score, not Credit Karma. You want to pull your FICO score so that you are prepared and understand what's to be expected as you're going through this home buyer process. Because if you come prepared, it's less likely that you're going to hit hiccups along the way trying to get prepared while you're doing something that is a major purchase. So just as a quick rundown, you need at least a 620, right? At a very minimum, 620. It used to be 580. But with different things that have happened as far as different things that are going on throughout the world, the restrictions have been a little bit enacted. So right now we're at least a minimum 620, and most first-time homebuyer programs are looking for a 640. So the stronger your score, the better. Now, mind you, in my opinion, a 620 isn't really a massive, like, strong score. You know, some people think, oh, I have to have the 700 or the 800 credit score. You don't. You just at least need a 620. But in exchange, if you're going to have kissing the minimum, make sure that you know you have your money saved in case anything comes up, and that you've taken care of what you need to take care of, so there's not any hiccups along the way. Kevin, do you have anything to give to that?
No, I think that, and if you've had any hiccups that may show on your credit, but you've taken care of it, make sure you have the documentation. That makes the process run smoother.
Okay, awesome. So minimum credit score, y'all say it with me, 620 or better. Okay, if you know that you don't have perfect credit, meaning that you've maybe just paid off a bunch of collections, you know, a couple months ago, then you want to at least have a 640. All right. So that's that there. Now, so what makes a mortgage payment? I think it's important for you to know what makes your mortgage payment, because it's slightly different than when you're a renter. So when you make the decision to become a homeowner, you have to change your mindset from renter status to homeowner status, okay? Your concept has to change, because when you become a homeowner, it's yours. So you're responsible for what goes on under the roof. So it's not just like Martin, like, step, get out. Like, you need to make sure that you got your stuff together while you're there. So your mortgage payment is going to be made up of up to 5 parts, which would be principal, which is the amount that you borrow, interest, which is the cost to borrow the money to purchase the home, taxes. Okay, so taxes are going to be varying based on the town and location. So if you're living in the county of the area, then the taxes are going to be less than what they would be in town if you're within the corporate limits. So if you've ever seen a sign that says you're now within the corporate limits of such and such, that's typically what that sign is representative of. Now, sometimes you will get homes that might fall within a part of in town that actually doesn't have town tax, but it's not often. Okay, but it can happen. So general rule of thumb, city taxes are going to be higher, county taxes are going to be lower. In exchange, the cost to live in the county is going to be higher. The cost to live in the city is going to be less, unless this is something where you live like in a city like New York or something like that, okay? The next part is going to be insurance, which is mortgage insurance and homeowners insurance. Please, ma'am, please, sir, don't get them confused. Mortgage insurance is the insurance that covers the lender in the event that you default, where homeowners insurance covers you as the homeowner in case something happens to your home. So if there's a tornado, if there's like a hurricane, if there's a fire, it's going to cover acts of God, you know, theft, burglary. But homeowners insurance will not cover flood insurance. So when you, if you live in an area where you think it's going to flood, then it's not going to cover that. All right, but that would be an extra rider that you could get. And then, of course, the last part is going to be assessments. So if you live in an area, or if you decide to purchase a home with HOA fees, then that is also considered into the mortgage payment when they're qualifying you, not so much necessary for you to send along with your payment to the mortgage company. All right, if you guys have any questions, please let me know. The next thing, who decides what homes are available? Well, sellers. Anybody who wants to sell their house. So right now you're on here as a home buyer, but there's going to come a time where you might want to sell your home. And when you're ready to do that, you'll reach out and say, hey, Shannon, look, I'm ready to list my house. And I'm going to say, great. We're going to go ahead and, you know, list your house. We're going to connect you to Kevin so we can go ahead and get you looking for another home so that you're not at a standstill between listing your house and purchasing one. So when you list your house, when you're on the seller side, you know, we would list your home for you, and then it would naturally feed into, you know, Zillow and Realtor.com. I tell people to focus on your wants and your needs when you're getting ready to purchase your home. And I tell this story all the time. I wanted a 1/2 acre lot in the country. I did not want to be in the town that I'm in, and I wanted a 1-story house. And I have less than 0.14 acre lot, 2-story home in the town that I did not want to live in, because I understood that my list of my needs was more important at that time than my wants. So, even down to the smallest things, like for me, I didn't want the toilet next to the tub. That was important to me at that point. Now, not so much so, but it was at that point. So if you know that there's something that is important to you to have as far as a need, say so. If you don't like walking up steps, let your agent know. Make sure that you have that clear list so that your agent or myself am not sending you a list of 2-story homes when you don't want one. Okay. Because the solution might be, okay, this could be a 2-story home, but it has a first floor master, and you might be okay with that. So it's just important that when you're thinking about your home needs, that you are clear with yourself about your wants and your needs. And then lastly, of course, that you're realistic. If you want to live on the beach, it's probably not likely for you to find a house for $100,000 at the beach. $500,000, million, yeah. But, less than that, maybe not so much. So I just encourage you that while you're going through the process of determining what you want, that you have a clear understanding of your wants and needs. So one thing that's important to people is, how can I make sure that I'm not getting a bad and horrible house? Well, you can make sure that you're not getting a horrible home by getting a home inspection. And that's to protect you as the buyer. It's yours. And, I can coordinate that for you while you're going through your home buying process. And it is yours to have. And it is something that you're going to want because it's for your protection. So it does a structural and mechanical search of the home. They're going to check the windows, make sure that your heating and cooling units working properly if that's in the home, that the appliances are working well, that there's, not any issues with the roof. They're going to go into the crawl space and different things like that and make sure that everything is working. So that's going to put you in a much better position, when you're qualifying for your home, to make sure that it is one that you can feel good about having purchased. So what can you expect when working with the credit realtor? All right. So you can expect for me to negotiate and pull comps for you. So what that means is when homes come on the market, or if you find a house that you love and you're like, look, Shannon, I'm ready to submit an offer, then that means that I'm going to search houses that may have sold in the area that you want to buy to make sure that the listing price is a good price. So that way you're not trying to purchase a house that is way more than what it says. And I help you with maintaining and monitoring dates and deadlines. So we'll schedule your home inspection for you. We'll make sure that you have an agent that you can work with, unless you have someone in mind, and then coordinating between you and the seller's agent to make sure that your process is going well. In that, Kevin would be there to make sure that your financing requirements are going through. Kevin, do you want to talk a little bit of what happens once a person is under contract? Because I think, like, you'll hear from us and then it's like a pause and then the lender's working. So he's, running numbers and making sure that everything works for you. So Kevin, do you mind giving like a quick snapshot of what that's like?
Right. So once you're under contract, Shannon will send over the contract to me, and we'll start getting it ready for disclosures. Disclosures just basically mean we're going to take the full application. So we're going to fill in any missing information that you didn't put in on the application, so that it's accurate and true, and we can move it forward. Once we've disclosed the loan, then you will, which takes a couple of days, you will then submit your most recent documentation. So in the beginning, when you got pre-approved, you submitted documentation, but in the real world, we're going to get the updated stuff as well. So, you've gotten paid twice since you submitted, your original documents. You've gotten another bank statement. So we'll get all of that updated information. And then from there, you'll be sent over some documents to sign. Once you've signed the documents for disclosures and you've sent the documents that we've requested to us, then there's going to be a silent period because we're preparing the file to go to processing. Once the file is set up and sent into processing, then the processor will reach out to you and get documentation that we may have missed on the front end. You say you have child support. We need the child support paperwork because you said you were working on getting it. Same thing with Social Security. I noted in the system that you get Social Security, but you didn't have 2020 statements, so you were waiting to get it back, and then my processor will follow back up with you and get those updated documents. So from start to finish, if you're doing a traditional mortgage, you're probably looking at 30 to 35 days to get your loan closed from start to finish. Whenever we ask for a document, even if you feel like you gave it to us, instead of saying, well, I gave it to you, why don't you just resend it and forward it to us? Because every day that we wait is a day that we lose.
Yeah, that's important. That's important. That's good advice there. Very good advice. I'm sorry, I wasn't trying to stop you. That was just really good advice.
No problem.
Yeah.
Once the appraisal and all of that stuff comes back, and, you know, mind you, it's a 30-day period. So the processor is going to get the documents, submit it to the underwriter. The underwriter is going to comb through the file, look through your bank statements a little deeper than us, your pay stubs, your, you know, make sure your income is verified. And by that time, when he or she sends the file back, we're going to be asking for updated paperwork. So whenever you get your most recent pay stubs and bank statements, keep them handy or just forward them to us before we even ask, and that helps. I will also say, well, most of the time people say, well, you know, what are they looking for in your bank statements? They're looking for your direct deposit for your job, for your pay, and we're looking for insufficient funds if you keep having those. And then we also look for deposits into your account that are not your normal pay stub. So we have to verify and check everything to make sure that everything is legitimate, or we have a reason why you all of a sudden got a deposit of $5,000 when you don't normally have $5,000 in your account.
That's good information there, because that's very helpful. Because if you do anything out of the way, then it can put you in a position where they would not be able to give you the funding for you to purchase the home. So all that is very important. While they're working on that, towards the end, you know, your attorney will come in and help with making sure that, you know, your monies for your home is coming from the lender and going to your new mortgage company and to the seller, making sure that you have a survey and title search completed, which means that you know where your property lines are. It doesn't matter if you have a fence, it matters where your property lines are. So they'll give you a printout of that, as well as making sure that you have free and clear ownership to your home, and then settlement would take place. The average length of time from the time that you find the house that you want to the time that it actually closes is about 30 to 60 days. Okay. So we want to help you, you know, be successful with these different, you know, tidbits and these secrets that we provided with you for your homeownership goals. So as I said to you guys in the beginning, you know, I'm an expert in credit, and Kevin is an expert at helping you qualify for a mortgage with student loan debt. So we put together the best information and secrets that we can give you to help you with your homeownership goals. So we're going to hook you up with the Fix My Credit workbook, which is going to provide you with information on how to read your credit report, making sure that before you pay those collections off, thinking that, oh, I'm going to pay this collection, this is going to help me boost my credit. You know, this book is going to help you get your life together so that you can fix your credit and work towards getting the score that you need without spending thousands of dollars to do it. We are going to provide you with how to budget, meaning how to budget is going to get you what you need to do, no matter how much money you make. So whether you make $12,000 or whether you make $80,000, because I'm going to tell you the truth. I have helped people who make six figures. I have helped people who don't. And believe it or not, the individuals who don't make six figures usually have more of a grip on their finances than those who do. Okay, so we're going to give you with a play-by-play of how you can be a better budgeter. Participants of this book here have saved anywhere from $100 to $600 within 30 days. It does what it needs to do. Okay, and then on top of that, it's also going to give you a plug and play. So you put the numbers in, it's going to spit out everything that you need to do. And then what is all of this if you've got student loan debt and you don't know what to do? So we are here to give you how to overcome student loan debt so that you can get a mortgage by yours truly, Kevin Jefferson. You've heard him here on the call. This is going to give you everything that you need so that you know what to expect when you're trying to qualify for a mortgage, what your student loans need to look like. It tells you how he can get you qualified with student loan debt. So if you're one of those homeowners who's like, oh, I can't buy a house because I got student loan debt, stop the negative thinking. Okay, get off the credit pity bus and make sure that you put in your request to download this thing. This is a bundle that we only offer to participants of our home buyer workshop. So this is a $297 value. I just told you that this budget book is going to save you anywhere from $100 to $600. So off the break, that's $100. Okay, and then to fix my credit, you can spend thousands of dollars for credit repair, and then you can easily spend $500 to $1,000 to a student loan consolidation company to try to help you get your loans together. So being able to get this information for $39 is mind blowing. I don't know what we was thinking, Kevin. What were we thinking? Were we? we just wanted to give the people something they needed, right?
Right.
Right. So I know you told me one time before, one of your student loan people, you were saying they had like $100,000 worth of debt or something.
It was $173,000 in student loan debt.
And she's a homeowner.
Yep, homeowner. Yep.
Okay, so y'all heard it. Y'all heard it from the horse's mouth. So we have this information here for you today. That is our plug. But the information that you've gotten from us so far today is definitely going to help you with getting where you need to be with your home ownership desires. It's going to work if you do. Okay, so some things to remember. The buyer very rarely pays out-of-pocket commission. We are here to help you through that. Okay, if you are nervous about purchasing a house, you can always get a home warranty. All new builds come with them, but if you don't buy a brand new house, then you can still get a home warranty for under $600. It'll cover it from tooth to tail, or top to bottom rather, as they say. And then agents can show you any house, no matter what agent is listed with it. So whether it's with Coldwell Banker, my agency, which is eXp Realty, Century 21, Keller Williams, ABC Real Estate Company, we're able to help you and show you the homes. So we are going to take a chance or the time now to answer your questions that you might have for your home buying. If you have any questions, now is a good time to ask them, and I will go ahead and do that for you. If not, I want to thank you for joining us today. Make sure that you check your email, because that's where you're going to have the opportunity to order that bundle, the Secrets to Credit and Home Buying Success bundle, that is only available to participants of this workshop. Again, you're going to get our Fix My Credit workbook. You're going to get how to budget no matter how much money you make, as well as how to purchase a home, or how to purchase a home basically with student loan debt so that you can get the mortgage that you desire. So if it was a thought in your head that you couldn't, I'm hoping that we've been able to help demystify that for you. And I look forward to seeing you be successful, and looking forward to you ordering that bundle. Order that bundle. Stop. Once you're done, go to your email, check it, order the bundle, because if you buy them individually, you're coming out of pocket at least $100. So you can't beat that $39 value. So it doesn't seem like we have too many questions going on here that we haven't answered already. So I want to thank you for joining us this evening, and make sure that you tell a friend. Thanks.